What's up, everybody? Welcome back to my channel. Thank you for joining me today. I am going to be breaking down an interview on Tone Vei's YouTube channel where he interviewed Willy Woo. I'm sure you've all heard of Willy Woo. He's a very influential person in this space. He has a very large Twitter following and he posts lots of very important data on his Twitter, so I suggest everybody go check it out. But I'm going to be showing some clips from this interview where he outlines what he believes to be some of the most important data for determining the strength of the Bitcoin bull run, what he believes gives Bitcoin its value, and how Bitcoin is moving in a positive direction towards decentralization and distribution of its coins, debunking the idea that whales control this market, as well as a few other very important topics. Before we get into that, if at any point you enjoy this video, please consider hitting the like, subscribe, and turning on my post notifications. Really appreciate all the support, everybody. I'm a super small channel still, so any amount of support goes an extremely long way. Thank you guys. So, in these first few clips I'm going to be showing you, he provides a chart that he believes is the best, most accurate data to determine not only the strength of the market, but to accurately depict how many people are selling and buying, and breaking that data up into entity sizes, and you really get a good picture of what the whales are doing versus what the smaller entities are doing. And what you'll find, I believe, is very interesting, because when you look at the data like he does, it seems like the smaller entities have a much better grasp at where the market is going to go as opposed to the whales, and how at this very moment the bull run is still looking extremely strong. Alright, so here is those clips now.
Right.
Dude, this is a really cool chart. Is this on Woonomic charts? Is this public?
No, it's highly expensive data that you're
And
gonna
I was
have to
about to
pay.
say, this is really good.
You're gonna have to pay 800 a month to the last node to get access to this. There's a massive amount of data science underneath this to cluster this into individual entities and surveil their history, right? So like actually most of the data you see elsewhere is just completely obsoleted now. Like those metrics are so past due date. And actually you'll see that from the bad analysis on crypto Twitter using old metrics like address spaces, because it does not show the changing habits of users, you know. See, dolphin and sharks. I want to debunk this whole idea that whales and the big guys are smart, because they're absolutely not. Like these are the dolphin sharks buying the top, and these are them selling the bottom, right? And let's go to whales. Generally, they sell because they're rich as they divest, and then they try to time the market. Sometimes they're right; they bought
And
the
they
bottom.
bought at the worst time back in 2014. Jeez.
There's a conspiracy that whales control the market, and that's completely wrong. And I'll get to that later. And this is like this is very recent research that I've been doing the last month, and it's like, oh my god, everyone's view on the market is just conspiracist and it's unsupported by data. First off, let's just look at this from a macro perspective. This is what it looks like for a bull market. This is what our bull market looks like. It's getting stronger. The buying's getting stronger, and there's no bear market in sight. It's just only getting bigger. And so, and the little geniuses like buying that dip, buying all of this dip while traders were shorting the market and selling their coins. And let's superimpose the other side, whales, right? What's interesting is nobody is selling right now. There's no sell pressure coming from these on-chain wallets. So the only people that can be selling are traders on exchanges who have their coins there, which this doesn't capture. All the coins are moving off the exchanges, which we can see on the exchange flows. Selling has been outlawed by every single holder from below 1 Bitcoin to above 1,000. Every single holder has outlawed selling. They're only buying and buying in large quantities. You can go back on the history of Bitcoin. Never have we seen a period this long of significant buying by all cohorts.
So I found that data very interesting. It really makes you think about whether you should be following what the big money does or if you should stick to your own convictions, because it seems like those who stick to their convictions are the much smaller entities, and they appear to be doing a much better job at navigating this market than the larger entities. So, in these next few clips, he really shows a macro view of how the whales are acting in this market and how the smaller entities are. And when you look at this macro view, it seems very positive for Bitcoin. In order for Bitcoin to succeed, it needs to be decentralized. And from the data that he's about to show, it seems like as time goes on, the coins are being distributed from the larger whales to the smaller entities. And not only that, but the whales seem to sell into strength. He provides evidence to suggest that when the whales are selling, the price continues to go up, and that they have a lot less sway on the market than many people suggest. So I will play those clips for you now.
And you'll see that this is what whales do. If you're sitting on 100 million plus, as Bitcoin rallies, you start to divest out and diversify into other assets and buy your super yacht, right? And so once price starts falling, you hold. They hold, they only sell into rallies. Whales sell into strength. So that's what we're seeing now, right? Whales are selling into strength as Bitcoin goes up. The moment whales stop selling, that's a bearish sign, not a bullish sign, in the macro landscape, not in the next few weeks ahead. So it's completely different from the view of the conspiracist theorists of whales controlling the market. They don't control the market, and they actually time the market very badly. Oh, by the way, let's have a look at the humpbacks. Humpback whales, more than 5,000. This is more than 10,000. Okay, I'm going to turn these guys off to make it clear. The 10,000 Bitcoins or more, adjusting for the ETFs and exchanges, now those guys are on extreme extinction, right? And so the mega wealthy are disappearing from the Bitcoin blockchain. This is like a story of immense distribution of coins to even distribution, which is exactly what you want in a monetary network. So the guys in the middle are still in the middle, but there's a general divestment since 2017 downwards, which is very healthy. The little guys are coming up. The only difference that we've got right now is the rise of the dolphin sharks over 100 Bitcoins. And this is the rise of high net worth family offices and hedge funds. We've got a lot of high net worth entities buying the dip, and they're reflecting in the dolphin numbers. So, but overall, we're getting a very clear picture that the Gini coefficient, the spread of wealth within this network, is moving incredibly well towards an even distribution and a very decentralized ownership, which is the only game in town, really. If this becomes centralized, Bitcoin it fails. The technology is highly decentralized, and particularly with the miners moving out, and now the hardware base is decentralized. So the main thing is for the holdings to be decentralized, and that is happening, folks. And I'll just remind people that the gold standard of money fail because of centralized holdings by central banks. Once they lost their gold, they decoupled and we have fiat. So if Bitcoin is to succeed as a monetary standard, this distribution needs to continue to spread out evenly.
So, as you can see, Bitcoin seems to be moving in a very positive direction. The extremely large entities are essentially non-existent anymore. The coins are being distributed to the masses, and that is exactly what we want to be seeing from Bitcoin. He also mentioned how the recent hash rate drop has caused mining to be a bit more decentralized as well. All in all, seems very positive for Bitcoin's future, and really makes you think about whether we should be following what the whales do as much, because they don't seem to be much better at timing the market than anybody else. In fact, the data shows that they are much worse than most people, and I found that very interesting. So, let me know what you guys thought of this data down in the comments. Does this make you feel more positive about Bitcoin's future in the short term and the long term? Leave your opinions down in the comments. Alright guys, thank you so much for watching. If you enjoyed, please consider hitting the like, subscribe, and turning on my post notifications. And I will see you all tomorrow for my next video. Peace out, everybody.